Hey guys, what's up? Alec back with the daily stock market, and look at that. We had a pretty green day Friday, a pretty green week overall for a lot of stocks as well. So in this video, we're going to be going over some of the most popular stocks like Tesla and Apple. I know a lot of you guys have been begging for a new Tesla update, so here it is. We'll also talk about Apple stock and a bunch of others. So make sure you stay throughout the entire video so you don't miss any stock updates and specific stocks and individual stocks that we talk about. Subscribe with post notifications on so you don't miss out on any future videos, and share this with a friend. Let's jump right into the video. So first up, we have Tesla stock up 9% on the week, which is very interesting. It was consistently making higher highs and higher lows. In the last month, we can see that it did sell off quite substantially, down around 12% before it had the rally, which triggered it up around 11%. All right, now we can see that it's approaching this double top that we had here in the past, right around $308 per share, where the resistance is. So once we break above $300 per share, that's going to be pretty bullish. And if we break above 310, 315, and continue to break some of these other resistances, that's going to be very bullish for the stock. So Tesla is going to be a great one to be watching this week. Make sure you do have your eyes on Tesla, because there's a chance that they do sell off this week as well. With the Fed meetings coming up, CPI, inflation, and all of the above coming up in the next couple of weeks, we could see the stock market turn from green like we saw it last week into a more red week this week. Now, if we just look at some of these headlines, which make sure you subscribe with post notifications on, because we'll do a more of a deep dive into these articles and the Feds. And we'll do a deeper dive on the inflation, the CPI, the Fed meetings that are coming up soon, which could be a huge catalyst, a negative catalyst for the stock market. But if we just look at some of these headlines for now, we can see inflation's cooling. Here's why the Feds may need to slow hiking. Okay, Feds race down home stretch towards another oversized rate hike. So a lot of people are expecting the Feds to come in with a huge oversized rate hike. Fed Waller says wants significant rate increase at the next meeting. Fed Chair Powell vows to raise rates to fight inflation until the job is done. Market now expects a 50 basis point hike at September Fed meeting. That was 3 weeks ago. So that one's a little bit old. Okay. And if it's a significant rate hike, and there is a chance that we can even see a 75 basis point hike. So we'll dive into that later on in the week on the YouTube channel. Make sure you subscribe with post notifications on so you get the full length videos straight notified to your phone every time a new one's released. Dive a little deeper into Tesla. So we can see an analyst article saying Tesla just took a stress test and passed it. The 2 quarters represented a stress test for Tesla. It had to deal with numbers of challenges, including limited production shutdowns at its Shanghai, China factory, soaring costs, etc. However, its June quarter results topped expectations, largely driven by a healthy ramp-up of total deliveries despite all the challenges. It also demonstrated its pricing muscle and showed that its production has clearly passed the pivot point of critical sales. Going forward, I expect it to recoup its fixed cost at even a faster pace and benefit from the scale of production to a further degree. A lot of competitors trying to re-enter the race to beat Tesla. General Motors has kicked off its second attempt to take on Tesla, the mass EV market leader. People are forgetting that Tesla is not just an electric vehicle company. They're doing a lot of different things, and the newest thing that just came out this week is Tesla could start building its lithium refinery factory for electric vehicle batteries in Texas this year, which could be the absolutely biggest thing for the company in the next decade. If you remember what Carnegie, one of the richest men in the world, he started a steel refinery. Right now, lithium is kind of like they're saying it's the new gold. Lithium wasn't really used too much until like iPhones came around, and lithium ion batteries, iPhones, now electric vehicle batteries are using them more than ever. So there's a huge rush towards lithium batteries. And if Tesla makes one of the biggest lithium factories, refinery factories, and has like a huge market stranglehold over the refinery of lithium, as well as an EV producer, and all of the other crazy things that Tesla is doing, it could be a great long-term stock that you definitely don't want to pass up on. Electric car giant Tesla is evaluating the feasibility of a lithium hydroxide refining facility on the Gulf Coast of Texas. Tesla said the plant would be focused on the development of battery-grade lithium hydroxide and be the first of its kind in North America, okay, which I was just talking about. It needs to be the first of its kind in North America and also have a stranglehold over North America, which I think that, obviously if it doesn't have a 90% stranglehold, I think that they'll still be a market leader in lithium ion battery if Mr. Elon Musk is able to pull this off. It could be huge, especially if they have a 60% market share over lithium refinery in just North America. That could be huge in the next decade. According to the letter of Texas controllers officers, if Tesla application is approved, construction could begin in the fourth quarter of 2022, as early as this year. So this is not even, I mean, obviously the results will be a decade down the road, the main benefit, the main results. But just in the next 2 years, 3 years, we can see this affecting the stock in such a positive way. The project will reach commercial operations by fourth quarter of 2024. So if you're a Tesla bull, a Tesla investor, you definitely want to be watching that like a hawk, the lithium refinery. I feel like a lot of people aren't talking about this. The only reason they are is because it's new news. I feel like this will probably blow over in the next few months and people will forget about it. So it's just another bullish thing that's baked into Tesla stock over the long term, that you're just getting a benefit of owning also now a lithium refinery factory on top of owning Tesla stock. So you're not just getting an EV company when you invest in Tesla. So you definitely have to understand that. Okay, and the next stock we're going to talk about is AAPL. Apple at $157 per share. Is it currently a steal? Is it a buy? What's going on? Earlier this week, we saw them as low as $153 per share. And in the last month, we see them down 7%. Okay? However, if we pull up the last 3 months, we see a 12% increase in the last 3 months. And we see choppy waters in the last year, going up 22%, selling off 16%, then going up 12%, then selling off 25% down to 135 per share. And then after that 135 per share, they rallied another 20 to 30% to 174. And finally, they sold off 8% to the current price of 157 per share. So needless to say, it's been a super volatile year for Apple. I think dollar cost averaging in something like Apple is the best thing, obviously, to do, especially with choppy waters like this. It's still up 1% on the year, which a lot of other stocks in the stock market are not. If you pull up Amazon, Netflix, Facebook, none of these stocks are positive on the year. Apple's becoming known as defensive stock, and it's becoming the blue chip stock to invest in, okay? 135, I think, is a great place to pick up some shares and put your price alerts. I think 145, 135 will definitely happen again. Say a safe bottom on Apple's between 115 and 135. So that's where I'm doing the bulk of my buying at. However, I am dollar cost averaging right now, which gives me an average cost of about 159, and I have around $500. If we scroll down, we can also see that they have a dividend yield. So they are a dividend stock, even though it's very small. The PE ratio is not as atrocious as something like Tesla, but the market cap is 2.5 trillion. So how much more can the stock really grow over the next decade is the question that everybody's asking when investing in something like Apple stock. On September 7th, some bulls are saying right now, it's just been updated. We think that Apple is still innovating with introductions of Apple Pay, Apple Watch, Apple TV, and AirPods, which are pretty new features that they can still drive massive growth to, which is a good point. Each of these could drive incremental revenue, but more crucially help retain iPhone users over time, which is a great point that a lot of people don't even think about. Apple's iPhone and iOS operating systems have consistently been rated at the head of the pack in terms of customer loyalty, engagement, and security, which bodes well for long-term customer retention. Between greater smartphone penetration in emerging markets and repeat sales to current customers, Apple has plenty of opportunity to reap the rewards of its iPhone business. If we look at what some of the bears are saying, on September 7th, just been updated also, Apple is believed to be behind firms like Google and Amazon in artificial intelligence or AI development, notably Siri voice recognition, Amazon Alexa, and then Google's voice recognition software a little bit ahead of Siri right now. But if they make Siri something like a Hey Alexa, and it becomes as big as Alexa, that could be a good revenue thing as well. Okay, so that just shows that there is more growth in that space. if Apple were to ever launch a buggy software update or subpar services, it could diminish the firm's reputation for building products that just work, which is something I pretty much don't agree with because obviously, yeah, that's a fact, but that could be anyone. Samsung could be the same thing. Anyone could do the same thing. It's just the risk when you're dealing with a big company like that. Netflix could have a hack or something like that. So you can say that about any software company, which I don't think that's specific to Apple. But if we move on to the third one, Apple's decisions to maintain a premium pricing strategy may help fend off gross margin compression, but could limit unit sales growth as devices may be unaffordable for many customers, which we see is not the case because they just put out the new iPhone and it's super affordable. It's actually the same price. The iPhone 14 is the same price as the iPhone 13. So in this specific video, we're not going to go over the iPhone 14 Pro and all that stuff and see if it's worth it or not and if it's going to sell. But in a future video, we'll definitely do that and see if it's going to be selling. We'll also look at some numbers to see how the iPhone 14 is selling compared to the iPhone 13 on opening weekend and opening week and opening month. So make sure you subscribe and post notifications on so you don't miss that video. Last stock we'll touch on is Google, ticker symbol GOOGL or ticker symbol GOOG. Same thing. It's just, there's really no difference. It's just voting rights, but you're probably not going to be voting anyway. So it's the same thing 100%. I just like to use GOOGL. Okay, now moving on, we see them down 8% in the past month, which is a little bit alarming. We can see that there is a support right here of $105 per share, which seems like they're at now. And it looks like if we pull up like a 3-4 month chart, we can actually see something interesting. Okay, with this Google chart, it looks like there's a good swing trade opportunity. So if you're into call options or just swing trades in general, this could be a potential one here because it looks like right now that we see Google at the support. Okay, and it looks like it's going to be making its way to the resistance right here. Okay, it's already hit the support 1, 2, 3, 4 times, so it's a little bit weaker. It'll also be good to be following this recent trend here from the bottom of September 6th to see if it makes lower lows. Right now, it's making higher lows and also higher highs, which is an interesting thing and a bullish trend that it's starting to follow after it's bounced off the support. So the technicals on Google look pretty good for a swing trade. However, obviously long term is going to be the most beneficial. We pulled up Apple stock and what do we see that if we pull up the yearly chart, it's up 1.2%. If we pull up Google's yearly chart, we can see that they're down 23%. Implying that they're a little bit better of a deal off all-time highs. Okay, from my all-time highs, they're are down like 25%. So it could be a good time to be buying for long-term investors, for short-term investors, and for mid-term investors. It's a good one to have your eye on. Right now I have 6.5 shares. That's mainly for long-term. However, if it does go below 110, closer to 105, and breaks even lower into lower supports, okay, like under $100 per share, I'll be loading up a lot more shares specifically for long term. We can see that's a $1.4 trillion market cap. So with the technology of the AI that it controls, the search engine and everything in between, I think Google could easily still hit a 2x in market cap over the next 5 to 10 years, which would be around a 15 to 30% growth per year. I think Google is going to be good for compounding over time. Okay, if we see some bullish things about Google, we can see the significant cash generated from the Google search business allows Google to remain focused on innovation and long-term growth opportunities that new areas present. Android's dominant global market shares of smartphones leave Google well positioned to continue generating top-line growth as search traffic shifts from desktop to mobile. As the number of online users and usage increase, so will digital ad spend, of which Google will remain one of its main beneficiaries, which is a really good point. Okay, is Google's dominant position in online search is not maintainable, as more companies and regulatory agencies are contesting the methods through which the company has been extending its leadership. Like, for example, TikTok is a big one right now that people are saying is going to turn into the next search engine. I don't believe it. A lot of people do. Alphabet is allocating too much capital towards high risk bets, which face a very low probability of generating returns. There's little revenue diversification within Alphabet or Google, as it remains heavily dependent on Google and Google search and the state of search and ad space. Okay, I think like 60% or 80% of its revenue comes from Google Ads. So that's something to be definitely weary about. Obviously, there is risks with Google. However, I think they're going to come out on top over the next 5 to 10 years. I definitely believe in Google, and I think they're not going to be going anywhere anytime soon. So I hope you guys really appreciate that video, and if you did, just smash a big thumbs up on this video is all I ask, and subscribe with post notifications on so you don't miss any future uploads. Share this video with a friend if you think they'll find it helpful. If you want to join my close friends list, click success number 6, success number 5. Read some positive testimonials. We have over 600 positive testimonials, over 900 active students, and over 1,800 total signups in the close friends list. So if you want to get started today, message me. I have a wait list going on. I'll shoot you over my website so you can check everything out for yourself. See if it makes sense to you and if it's inside your budget. We can help you start developing some wealth in the stock market and options trading. All right, guys, thank you for all the love and support. I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.